everybody. Today is on the 19th of August. Welcome to the market brief. My name is Nick. I'm going to be taking you through it. So let's check on what we did yesterday. So we're going to break it down this way. Look at what we did yesterday's analysis on gold and Euro USD. And then we're going to check on the fundamentals, what we expect today. Again, we're going to be jumping onto now fresh new analysis, both technical and fundamental on gold and on Euro USD. Now check this. Before that, I want to tell you something that today at 7:30 p.m. we're going to be having a live webinar, and we're going to be talking about, it's going to be more of a discussion, and you don't want to miss this. We're going to be talking more about why do traders end up breaking their own trading rules. So we're going to be going through the common trading rules that are usually broken and why. What are the reasons as to why people end up breaking those trading rules? So we're going to be looking at the psychological bit of trading, and we're going to be talking about a mod, and also we're going to be sharing our own journeys on how trading has been for the last maybe 10 years, 20 years, or we're going to be talking about all those dynamics this evening. So click on the link. I'm going to be sharing the link on the chat right now. Click on that link, just register, and let's see you there in the evening. All right, you cannot afford to miss this one. See you at 7:30 when we dissect and digress inside the world of trading and the rules that traders usually go ahead and break them once they set them. All right, good. Now that being said, we jump onto our charts. This is what we did yesterday. We were looking for buys above this point. We didn't really get the buys. The buys didn't really materialize, but the sells, on the other hand, we had some very good run. Now the problem is, this is where we're looking to get the sells from, but we have this candle that came in, activated the sells, so sell stops, went to take profit one and hit and went back up. Now here, the next candle, when the next candle was coming in, unless you had a sell stop set over here, that would have been, you would have missed this easily, because again, it just went all the way straight to profit 1, 2, and tried to push all the way to 3. But then again, there was this retracement that had happened over here. So what I did is, the moment this one got activated by this wick over here, I got out for the rest of them. But then the moment this candle went down and closed over here, I sought to see for a retracement over here, and the moment this retracement came in, I took it from this level over here. I took a sell from here and went down to this point, came back, was just looking at it. I had also my stop loss at break even, and then but eventually it went down. So I gave my trade a second chance, and it gave me some outcome over there, some good outcome, right? Euro USD, what happened? We had the buys trying to push up, which is really good. Over here, got activated. The buy stop got activated, but then didn't materialize, so go out. From this side, we had this break above this point. The moment I saw a break of this candle over here, I took in a buy from this point and went very well. So repaid the loss that was here and got something more on top of it. All right, good. So now we're gonna jump straight onto it and see how the market is gonna be happening today. All right, so we're gonna remove all the drawings. Before that, let's check on fundamentals. What do we have today? Today is the 19th, not the 18th. You have the GB, the CPI, which already passed the GPP, but in the evening we're looking at the FOMC. It's going to be happening at 9 p.m. the FOMC, right? So, and Christine Lagarde is going to be speaking at 1 p.m. and already spoke at 10 p.m. So let's check on what's possibly going to be happening. All right, so FOMC minutes from 9 p.m. at the evening. All right, so let's draw this. Let's get this one done over here. We're gonna remove all the previous analysis and check on price action based on market structure. So we're gonna be looking at identifying those areas of support and resistance and see potential places that we could execute today. There we go. Monthly lows, monthly highs recorded over there. Weekly, we go down to, remember the weekly high that we're looking at is this one over here. Basing on the fact that this high is not broken, so we're still jumping onto that point over there. But when you go down to daily, we want to materialize it like this. This is the level that got broken yesterday, so it's making sense to for us to continue pushing. This is a level that we got bounced over here. The market bounced from this point. Then we have a high over here that we can't ignore, which is over there, right? So we want to see on 4 hours what's happening in this market, right? So that's the high over there. We're gonna wait for the market to basically literally break above that point for us to see if we can have something at least meaningful materializing from that. All right, there we go. All right, so we are here on the 4 hours highs. That's where the market is being rejected right now. We have a good fresh move that we could do above. When you consider the bodies over there, we got a fresh move that we could do over here for this. On 30 minutes, we got this over here. All right, on 15 minutes, what do we have? The 15 minutes, we have this over here. All right, we're gonna do it like this, like that. Okay, so this is good. We should have potential buys above this point. I'm looking at potential buys above that point. That could be a nice area for us to take in a buy from that point. Now for the sells, haven't really formed as well that we want, but we want to see if we have a formation of a support level over here. That is, if this candle closes like that and is closing the next 2 minutes, which I bet it may close like that, then we could start looking for sales below this wick. So looking for potential sales over here. And moving down over there to this point, right? So this is, we assuming this candle is gonna close just the way it is. It's less than 1 minute. In less than 1 minute, the candle is supposed to be closing. So the probabilities are high for it to close just the way it is, and probably could be looking for sales to go down from this point. That is, if we get that. If we get the buys buying above this point, that would be really good to push up. If we get the sells below this point, candle closing below this point, then we could try and see if we can get potential moves to the downside. All right. All right. Okay, just 1 minute. Let me respond to someone. All right. All right. So pushing up over the, yes. Now this is a nice close. See the way it closes? Very nice. So now that's formation of a support. Now we need these two areas to be broken. Break above this point, gonna buy up. Below this point, we're gonna take up a sell over here. This is really good. All right, let's jump onto gold and see what we have on gold today. Boom, boom, boom. There we go. Remove all the drawings on gold. Let's jump onto it and do a fresh new analysis price action based on market structure. You're going to identify the areas where we can hereby see potential breakout trades moving up. All right. Those are the highs. Now remember, these were the weekly highs that we're expecting, and you see the market is still at that point, right? This kind of hasn't closed above, and this one neither has the current one closed above. and of course it's not closing anytime soon until Friday. So let's see how it behaves. Should I? But again, if you go down to 4 hours to 1 minute to 1 day, sorry, daily, we gonna put it over there. Okay, I like the way the formation of this, but I don't. You know what? Let's just put it over there, just for clarity. All right, so that's a daily highs and lows, 4 hours. For 4 hours is over here. This is the high on the 4 hours. You see the market is actually breaking above, and the lows on 4 hours, exactly where those candles are. Yeah, same thing over here. So readjusting it a bit. Catch that on 1 hour. On 30 minutes, we're gonna readjust it just a bit. We want it to break above and continue pushing up, but that's where we are. Even on 15 minutes, same thing. All right, good. So now the thing is, we would like to pick on the buys from this point, but then again, it doesn't make sense because we're gonna go up to this point. But yeah, no, it's a good place for gold. Considering it's gold, yes, makes sense. It looks like a small move, but it's a very large move. And then I'm gonna work with all these rejections over here. Should we push above that level, of course. Now on the lower side, there's an area over here that looks like an interesting level of support over here. I would love also to see a formation. If we have a formation over, let's say the next candle, this one candle doesn't break, the next candle just forms in between here and closes bearish. So we're gonna be having a formation of a sell support, so we could sell all the way from this point. But as we stand right about now, this is the sell places, and that's what you get. As we stand, this is only what we get. So let's write potential buys above here and potential sells below this point. Potential sells below here, like that. Long position over here. Short position right over here. All right, so sells from that point. All right, so if we get a sell below this point, then we could push down. If we get a break, this candle breaks above that. If this candle closes, see it's below this one. Holding the stop loss below this candle over here. So if we get a break above this point, we're gonna take in a buy from this point and see if we can push to deep 1, 2, 3, all the way to 4 up there. But let's see how the market happens. See, it's pushing, yeah, but we need it to close fast. So don't jump into the market just because you think it's pushing. Remember what we usually say: trade what you see, not what you think. All right. So we're gonna be checking to see what you're gonna be seeing is what you're gonna be trading. So if that candle breaks above and you see it break above and close above, then could grab this out, the buys. If it doesn't, don't wish for trading. Don't do wishful trading over here. Right. So good. All right. So remember, we have this webinar coming in. We have a webinar coming in today, right? So just again, for those who had not joined, well, when it started, I did introduce a webinar that we have today. So we're gonna be having an exclusive webinar for all of you. It's gonna be happening at 7:30 p.m. today. We're gonna be talking about why most traders end up breaking their own rules, or how do you control your rules, and that's so that you can be able to control your account. So we're gonna be talking about all of these. basing it on the psychology bit of trading and all that needs to be taken care of when it comes to the trading psychology. All right, we're going to be giving our trading history and how that was once messed you up and how you overcame it. So we're going to be talking about all of these things at 7:30 p.m. today, Kenyan time. Do not miss. Look at the link on the description over here, and also at the link we're going to be sharing it on the comment section as well. Click that link. Let's meet at 7:30 p.m. All right, take care guys, everybody. Trade what you see, not what you think, and have a good bye bye.